All right, everyone. This is Matt Langle again with Denver Private Wealth Management, coming to you with our 5-minute market commentary on the topic of inflation. Now, inflation's been a little bit of a buzzword here in 2021 when we look at all the economic stimulus that's been pushed into the economy, especially with all that pent-up demand that's occurred over the last year or so of life starting to come back online and people starting to spend their hard-earned dollars again. And people have questions in the sense of, is inflation good? Is inflation bad? What's it mean for my personal portfolio? What's it mean for the economy? And hopefully, these next few minutes are going to help analyze what exactly it means, what we're seeing, and how it potentially can affect your individual portfolio. So, to start, prices are certainly going up. If we look at the price of copper and the price of steel, which are going to be two indicators that people use when looking at inflation, just because copper and steel are used in so many manufacturing products and so many products in general. We've seen 2-3x price increases since COVID. And before we kind of get into why that is, I think it's really important to understand the concept of supply versus demand. And so what I mean by that is if there is a lot of supply and very little demand, then you're going to see prices come down. If your favorite baseball team is last in the league, well, the tickets are still on sale, but there's very little demand for it. And so you're going to see prices go down in order for those tickets to be sold. Now, the flip side, what's happening right now is there is very little supply and a lot of demand. And so the people that have the means in order to buy that product or buy that good are now pushing up the price. And using the exact same analogy, we're noticing that when it comes to baseball stadiums coming back online and only having 25% capacity, they have a limited supply with people excited to finally get out and about. So there's a lot of demand pushing up the prices of what that limited supply of tickets will go for. And we're noticing the same thing when it comes to the economy. In the past, and typically, this is going to be a manufacturing issue. Manufacturing isn't pushing out enough goods, enough products to meet the demand of the economy. Now, what's interesting is that's actually now what's going on this time around. What's going on this time around is more of a supply chain issue in the sense of manufacturers done a pretty good job of keeping up, but the global economy still isn't completely vaccinated. The global economy still hasn't really reached that herd immunity standpoint. And because of this, there's been issues along the supply chain. If something's made in India or China and it's supposed to get to you here in the United States, it needs to, go through ships and planes and trains and trucks in order to reach your destination. And that supply chain right now is limited because there's limited people that can work it. When you start looking at COVID-19 measures, to stop spread and how much longer it takes to maybe clean out the vessels or clean the cargo. And that's really causing more of sort of that shortage of supply that we're seeing at the moment. The good news when it comes to that, though, is that should hopefully iron itself out over the rest of 2021 so that by the time 2022 rolls around, there's a little less of those supply chain issues as more people are vaccinated and more things coming back online. So when it comes to inflation, though, and the increase in prices that we just looked at in the last slide, the question is historically, what's this all mean? And you'll notice over here, the Fed tracks about a 2% inflation rate per year. And, actually over the last few years, we've actually been slightly below that target. We've been more towards, the high ones, slightly underneath our 2% Fed target. And this year, with everything coming back online and all the things that we mentioned, we're actually expecting more of an inflation number somewhere in the mid twos, which is, high compared to what we felt, recently. But if we look back, into the 70s and the 80s and post World War II, we're looking at inflation numbers of 15%. And that's really more that runaway inflation that is cause for concern that people are worried about. Not so much us going, half a percentage over where we currently are, but more so if we saw those runaway inflation numbers of the past of, the 40s and the 70s and the 80s. And that's not the picture that we're seeing at the moment, especially when we start factoring in what we're going to see with some of the tools at the Fed's disposal, such as increasing interest rates, to tighten inflation, unwinding some of their balance sheet. There's still plenty of options available to them. Finally, we just want to look at what this might mean for your overall portfolio. And if we agree that we're in a low and rising inflation environment, which everyone thinks we are right now, well then where do you want to be positioned? And the point being is, let's use a median inflation rate of 2.5%. Okay. Well, you want to be in equities, you want to be in stocks, you want to be in things that can outpace that 2.5% at a fundamental level. And stocks are a great place to be. REITs, which is real estate, is a great place to be. Actually, some of the worst places to be would be in cash or bonds. Think about if you had $100,000 and you put it underneath your mattress. Well, that might make you feel safe because you think that there's no risk of losing it. Well, actually, your $100,000 next year is only worth $97,500. So, while it might make you feel good, thinking that there's no risk involved, it's really just death by 1,000 paper cuts. If you can't keep up, think about treasuries, cash, short-term bonds, things like that. They can't keep up with inflation, then you're actually just losing money. And while gold and commodities certainly do very well in this low rising inflation environment, as you notice, be forewarned, in a high falling inflation environment, those tend to struggle. So I hope this provides a little bit of perspective in terms of what we're seeing in the economic landscape and where inflation may be coming into play. It's certainly something to look out for as the rest of 2021 progresses and life continues to come back online. As always, please feel free to reach out with any individual questions about how this might affect your portfolio and your unique financial life. We are always happy to answer questions. Thank you.